Good morning, everyone. Thank you for joining us on Morning Markets, our daily update on what's been happening in asset markets from the team at True Potential. Today, we'll just look back at how asset markets performed last week and what was very much a tale of two halves, really, when we look at the beginning of the week versus the end of the week. So let's just dig into that a little bit and looking at how equity markets performed over the course of last week. There was the volatility at the beginning of the week, which we've discussed, but then as we move through the week, we see equity markets continue to move higher, with the US outperforming broader global markets, and within that we see both the S&P 500 and the Nasdaq hitting all-time highs. And also as the week progressed, we saw a bit of a rotation back towards the more cyclical value orientated areas of the market, in particular the financial sector, and I'll come on and discuss one of the reasons as to why that was the case last week. I think there's another couple of points just to highlight in terms of the supportive backdrop coming through. One was the infrastructure package in the US. This finally got approval from both the Democrats and the Republicans. Now the size of the package is somewhat smaller maybe than initially had been expected. If we cast our mind back a number of months, you'd have heard us talking about something in the region of $1.5 to $2 trillion. What we've ended up with is a package of some $579 billion, incrementally really good, and will certainly support that agenda. The other supportive factor for markets towards the end of last week was in the US the stress tests of the US banks, and with the Fed coming out, and it was nothing was expected in terms of there being any problems, so that's clearly a positive. But what did come out as a result of that was the allowing of US financials to resume the share buybacks and dividends, and that's clearly supportive from a valuation perspective for the US financial sector, and indeed positive for sentiment as well. So that certainly helped that area of the market. And then also inflation. We had the Fed's favoured inflation measure on Friday, PCE inflation, and that came out speaking to this narrative of a temporary increase, because we saw the month-on-month increase slow down ever so slightly. So month-on-month plus 0.48, 0.6 was expected, but last month was 0.7, so that month-on-month change slowing a little bit. Year-on-year basis, yes, the numbers are still elevated, up about 3.4%, some close to the highest level that we've seen since 1992. So that just gives you an indication of the challenge that we're facing from an inflationary impulse as economies reopen and we move our way through the COVID-19 challenge. Just looking ahead to the rest of the week, what can we expect there? A few data releases that we'll be looking at as an investment team coming into this. Japanese retail sales will come through for May. We've PMI readings for China. We've Eurozone, CPI and retail sales data as well. All things that will help gauge a sense of how the recovery is continuing to evolve across the globe. I think the other two things just to touch on at the end of the week, we have the June payrolls report, non-farm payrolls in the US, key focus for the market. This has been a bit volatile as we've discussed over the past 2 months, and also it takes on, I think, a little bit of added importance just because of the focus that a number of the Fed speakers gave last week to the improvement in the economy from an employment perspective. And really this anomaly that we're seeing, that the participation rate is not improving despite the record levels of vacancies that we're seeing. So really the Fed mentioning that and wanting to see the participation rate improve. I'll leave it there. Please do subscribe. You can see the button just there at the bottom. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.